All right, guys. You are welcome to Donval Versatile. Don't feel free to subscribe to this channel so that you get to know when we upload the new videos. Yeah, some persons are saying, just do a video on how to set take profit and stop loss within your phone. Okay, so I will not waste time in this video. It's just going to be very, very brief. So what you do, you return to your chat. Okay, you go to your chat where you execute orders. Okay, you go to the chat. Okay, so this is the chart. This is crash 1000 and the crash 1000. You see crash 1000 under 15 minutes is currently pushing up a bit, though it's a downtrend market, but it's currently retracing up. Okay, so what you do is that the whole thing is to understand the principle of take profit. You know, take profit is the restricted boundary you instruct the market to close on profit when the market is going on your favor. While stop loss is a restricted boundary you instruct the market to get to take you out of the market when market is going against you. And of course, is when you click on the execution button here, that is where you see the take profit slot and stop loss. This one is stop loss, this one is take profit, this one is what lot size. Do you understand? So how do we get the number? Because here we need to get a particular price where you want the price to reach and do a kind of command you have instructed them to do. So this is crash, this is crash, and the crash is moving up. You see, it's pushing up. If you look at this price, we call this thing that I'm showing it, we call it price line. We call it what? Price line. If you look at this number, you say it's moving, but it's moving up. As it is moving up, it is producing this green candlesticks. Let me turn to this one. You see, as it is pushing up, as this thing is what pushing up, you see another new candlestick is forming as well. You see another new candlestick is what forming as this number is changing, as this the price is varying upwards. So as it is pushing up, we usually set take profit in front of the market. Let's assume that if this market that is going up, the moment it gets here, let it stop. Let the market or the market close automatically in profit. Stop loss, we set stop loss below the price of the market, below the price. You see, this is the price. So we set the stop loss below so that if anything should happen, if this price want to go down, that the market should stop here. And if it should continue up, that if it get to this point, let it will also stop. But if it is coming down, that means it will stop you at a loss. It will stop you at a restricted loss. But if it is going up to hit your take profit level, it will stop you at what? A restricted profit. So, but the implication is that in boom and crash market, stop loss doesn't work as expected. As expected, I mean, you cannot instruct, because this set of stop loss is that maybe you have $10 account, you can instruct this market in other volatilities that I use 30 cents as a lot size to stake this order, and I want to make up to, let me choose this time around. That let's assume you want to set your take profit here, that if this market come here, let it close on its own, and the price of this market, and you want to set your stop loss here. You understand? Remember, if you look at this two line, let me show you something. If you look at this line, it's below this price. If you look at the other one, is above the price, because this is the price. The price is heading to the take profit. Then the sense of this stop loss is that if this price want to move back, let it stop within this boundary. Do you understand? So in other system apart from boom and crash, if you calculate the value, the dollar value, when this thing move from that point where it is now to this point of stop loss, if it is $1, let assume spike happen that is supposed to consume you $1 within this range. In boom and crash markets, they don't always stop where you tell them. If a spike happen, this stop loss, what I want to say is that stop loss don't work 100% in boom and crash markets. It just work 50%. If a spike happen and the net of that spike is supposed to consume $3 from you, they will definitely consume that $3, but they will close the market at $3 loss. But the normal psychology behind stop loss is that out of that $3, you can instruct the market to at least take only $1 or take $2 and leave $1 for you. But in boom and crash, you cannot instruct them the particular amount they will take and leave others. Rather, they will take what they want to take and still and close your market at that first instant break. So if you want to set take profit now, we just look at this boundary. You just measure a boundary where you possibly think that the market will get to. Like here, this particular up, this particular thing. You see the price. You see this line now. I can take it as our take profit level, and then what do? If I take it as a take profit level, what I'll do now is to copy this price. You see this price, 78.63. If I like, you can forget about this other decimals. 78.63. You now go where you want to put market. Then you come to what? Take profit point. That is the take profit. 78.63. You click on buy. You see? So if you come here now, you see the take profit, it's just a line there. If you look here now, you see TP. You see TP here. Look at the take profit line. If I want to put another market, I'll also go 78.63. I'll use the same level to put as many markets as I can, depending on your equity and depending on how sure you are. 78.63. This whole market is aligned with that same take profit. That is to say, if this price move here, get to this place, they will definitely close automatically. So stop loss now, I can decide to take my stop loss here. Let's assume within that same market I've gotten. Sometimes you see spike just happen now. You see spike just happen, but I'm not putting the stop loss. I can decide to drop my stop loss here. The spike happened because there is a dynamic resistance zone here. You see this market come here, go down. The other one come there, go down. You can watch my video on how to identify a zone. All the possible points spike will happen. Do you understand? So I can decide to use here as my stop loss. This line I put now. What do? You also copy the price here. Look at the price, 78.59. That is the price. If I want to set stop loss onto this market I've already put, what I will do, I will just go to that market. I'll just come to the market. Look at this one. I've forgotten the figure I copied. Let me come. 78. I'm talking about this figure, 78.59. Okay, 78.59. If I want to put it to this same market I have executed, 78.59. All these markets. If I want to put stop loss, I'll just press hold in any of them. Press hold. Go to modify. You come to stop loss. 78.59. Is that what I copied? I don't sure. Let me say 58. Yes, because price have gotten closer to that place. That's why. 78.58. You click on modify. The moment you click on modify, if you come to chart, you can see. Look at the stop loss here. You see it? Stop loss SL. They have just aligned here. Though this thing will be spiking any moment from now because it's within a zone. It's within a zone. Remember, it's still a downtrend market. So this is the stop loss. If I want to put the other market, I will just go and press hold it and click on modify position and click on that 78.58 and modify. You see, they will enter. So I'm indirectly putting the whole trade, this thing to take the same take profit or stop loss. Do you understand? If I want to, if you like, maybe from the point of your putting trade, if you want to put the take profit and stop loss immediately before you are putting the trade, you can just as well. Let us use another index and do this. I want you to really understand this. This is a boom. I mean, I'll get to higher time frame a bit where we can see this is boom, right? This is what boom 1000. We can decide that we use this cross. You know, boom is moving down, is selling, right? Is selling. So the take profit for boom now should be found below. That is, it should be set in direction of the market so that if this market move and jam it, it will close and profit. That is the take profit. Then stop loss will be placed above the price so that if boom want to spike back, this particular wage can stop it from taking excess loss. Do you understand? So in boom, we set the take profit in front of the market, where the price is going, that is where you put. Remember, this thing is pushing down. If you look at this thing, it's just pushing down. The price is varying and is shifting down. If you go to smaller time frame, you see how the candlestick is forming downward. This thing, I mean candlestick. This is what I mean. These small ticks. The thing is, this price is shifting and is forming these red ticks, which we call candlesticks. So because it's shifting down now, so you're supposed to set the take profit in front of the market, where that market is going. As the market is going down, so we need to put take profit somewhere, so that when the price jam that take profit, it will stop. The implication, the expectation is that if this price could move from here to here, let it close at profit. Then stop loss should be above the price, so that if this thing want to spike back, let it stop the loss here. The loss is here, because without this stop loss, they will keep spiking. Or maybe the strength of the market demand that the spike will reach here. That means they will minus you. They will give you a high drawdown for reaching here. You know, this the loss you encounter when you stop the loss here will be different from the loss you encounter when this market, we don't put stop loss and the price of the market get here. So it will be more higher. If from here to here, let me clear enough. If you put stop loss here, and this market eventually spike, bam, and end your losses here. So it's different from when you no put stop loss and the market spike and reach here, no stop loss. If it minus you from here to here $3, from here to here will minus you up to $9. Do you understand? So it's good to put stop loss, but you know where to put it. Do you understand? Then take profit now as this price is coming down, as the price is coming down from here. So we are going to put take profit at least in front of the price, so that if the price got into this place, let's assume if this price get to this place, let it what close in profit. So what do you do now? You copy this price. You copy this price you are seeing there as your take profit, and copy this one as what? Stop loss. Stop loss 47.55. Why take profit is 47.47. 47.55, 47.47. So what do? You go to your chart. So 47.47 take profit, 47.55. 47.47 will take profit. 47.55 stop loss. You will now execute your order. Bam. Both of them will automatically be inserted. Look at it. If you look here now, let me remove those now. You see take profit here. Look at the take profit. Look at the stop loss. You see it's reaching the SL. This one TP. It's reaching there automatically. But you cannot just put this thing, take profit and stop loss anywhere you are, any place you want. Do you understand? You don't just put it any place you want. There are some little calculation we do made before you could place the stop loss or take profit, and we call it, you must apply risk management calculation there, which we call the risk reward ratio. So that later will come, the video will come later. So if this market eventually hits there, they will close immediately, because that is where the take profit is. So that is to say, you expected to set take profit on boom, let me say below, in front of the price of the market. Remember, this price is pushing down. Remember, the price is pushing down currently. In your boom is pushing down. You know, boom push down. So the take profit should be in front of that market, where the market is pushing to. Should be in front of that market, so that the implication is that if the price jam it, it will stop. So stop loss should be above, behind the price of the market, behind, so that if this price want to spike and jam this one, it will stop. So that's the psychology behind take profit and stop loss. So let us you see all those ones have converged to profit. Let us do a practical example of what we are saying. Let me close all these ones that have converged profit. I will close one of them first, so that we do it and it will happen straight to your eyes. Do you understand? So this is boom. I'm going to put take profit very close by so that you see how it closes. So let's assume I would like to put take profit here, maybe after a few candles here, very close to the price, that when this thing push to this place, that is close. I'll copy this price, then the price within the side of the market. Let me delete all this thing. So if I take this my take profit here within this level, and the price, stop this thing now, let's assume here, and the price of this market from that place is 47.45. So I'll just go to the boom, and on take profit level I put what, 47.45, sell. Let me put the menu, you see how they will close automatically. Take profit 47.45, I think, sell. Okay, I can put as many as I can depending on your equity. 47.45, sell. So when all these people get to that same price level, if they get to this price level, they will close immediately. If this price of this thing push to this price level, they will close immediately. You see this dotted line, that is the take profit. So when everything gets there, they will just close. This is crash. So remember, at crash is pushing up, right? It's pushing up. So we are going to set our take profit on crash above the price, where the price is going. You see this thing is pushing up. We are going to set it above, so that if the price jam this thing, let it what, close. And we are going to put stop loss behind the price, so that if the thing want to move down, let it stop within this boundary. So what I'll do now, I use horizontal line to get the price. So why I use this thing is to get the price, because you can get the horizontal line from here, place it anywhere you want the thing to tip. You may be very close, because I want this one to happen here. Then you now copy the price at which you want this thing to close. You see 78.34. If you want to take profit, stop loss, this one is take profit 78.34. Let me see if they can allow me, because I set it very close range. 78.34, 78.34, buy. This is now crash. This is invalid, it's too close. Do you understand? That's why they say invalid. So you have to adjust it a bit up. 78.35. Let me say 35. 78.35 will go. 78.35, buy. You see, they are still seeing it as close as anything. Let me check whether that's, you see, the other one I placed have closed. The boom, they have closed automatically. Do you understand? They have closed automatically. Let us put this one and watch them. Let me make the adjustment now. 78.36 as a price. You know, if you put this in too close, they will not allow you. 78.36 will definitely go, because it's two people ago. 78.36, buy. You see, it has gone. Look at the boundary. You see, if price touches that 78.36, it will close. Let me put more market and we're gonna wait. 78.36, buy. Let me put again. 78.36, buy. You see, they are getting very close. Just be watching these two prices. You see how they will just disappear with immediate effect. These two order, they will disappear when the price gets into that point where we set it. Just be watching them. You see how they will just what, disappear automatically without closing it. So that is the sense of take profit. It's a boundary we instruct the market to close. See, they have just disappeared. Do you see it? So that is how it happens. So what matters is knowing the boundary where you put your take profit. But the psychology, I want you to understand that in a crash market, you set the take profit above where the price is going. You see it's pushing up. We set take profit at the front. You set stop loss behind, below the price, so that if the price want to move down, your stop loss can stop them within the level where you placed it. But remember, I told you boom and crash doesn't obey stop loss at 100%, like that of take profit. Take profit is 100%. The point where you stop it, you say, you tell the market to stop, is where it will stop. But in the case of stop loss, if you put a stop loss here now and this thing want to crash down, they can crash beyond your stop loss. They can crash and pass that your stop loss. And if the pip value or the dollar worth of that spike will consume up to $5, they will definitely take that $5 and close your trade for you at $5 loss. But you cannot instruct them within the boom and crash market to take $3 out of the $5. No. But in other volatilities, let's assume volatility, the same thing happened to volatilities. It's the same operation. So it's the same operation, nothing different. In volatility, you can put your stop loss, your take profit. If you see this market is coming down, that means you are setting your take profit below the price. You are setting your take profit below the price. Remember, there is a zone here. That's why this thing is repairing. There is a zone here, so and it's going to reject. You see, it's already rejecting sharp. So your take profit should be in front of that market where the market is going, because this market is currently moving down. So you set your take profit in front so that if the market is jamming it will close in profit. Then your stop loss should be behind the price. Since the price is moving down, the behind is this one. This one is the front. So if you want to do the take profit, you just use your horizontal line. Get your horizontal line, put it there so that you could be able to see the price. Look at the price, 95.88. You see the price want to pass it, because this one will not enter because it's getting very close. Let me adjust it. Let me say 95. The price, the more you change this line now, the more the price will vary. It's now 95.78. You can put this market, take profit, though it will retrace before coming down because of that zone. 95.78. You just come here to where you are putting market. Your take profit should be what? 95.78. Let me reduce this thing to 300 minimum. Then you make sell. Let's assume you want to sell in 75. Do you understand? 95.78. If you want two other, you also use the same level, 95.78. Sell. You allow it. If you want to put a stop loss to this particular index, let's assume you want to put your stop loss somewhere around here. Okay? What you do, you get your horizontal line to get the price. Use your horizontal line. Look at the price. You see the price there, 96.24. 96.24. You can go to that same market, press hold it, click on modify, go to stop loss 96.24, modify. The stop loss will enter there. You understand? You go to the other one, modify, stop loss 96.24, modify. It will also enter there. So if we go to that chart now, you'll find out that we have a stop loss line there. You see it? Look here, you see stop loss. That is this level. If this price now jam this thing or jam the take profit, they will close. It's either it jam stop loss here and close, or they will jam take profit down there and close in profit. If they jam stop loss, they will close at loss. If they jam the take profit, they will close at what? At profit. Do you understand? So just be monitoring this thing. If it is jam here, it will stop at loss. If it also jam here, it will stop at what? Take profit. Do you understand? That is the implication of this thing, and it's very, very rare. Remember, I said you don't just set this thing. There are some little calculation we made, which we call say risk. You must apply risk reward ratio. The risk reward ratio is that your take profit point must be 3 times your stop loss space. Your risk should be 1/3 of your reward. That is to say, that one will come from the next video I will do, how to calculate risk and reward. Do you understand? And that one involves some little calculation, and we'll do that. Just set this stop loss and take profit and know how it helps you, whether you can get it and all that, and you roll. Thank you. This is Donva. Don't forget to subscribe to this button and request for the kind of video you want us to provide for you. Then we'll do it at our convenient time. and we'll keep growing in the system. Thank you and congratulations. Thank you.